pension, and I'm a pension operations officer at Britam, and I'll be your moderator for today's session. Before we begin, let's bow down for a word of prayer. Let's pray. Our Father in heaven, come on to this particular morning. We say thank you for this beautiful morning. As we are going to start today's session, we pray that God may you guide us through this session. And at the end of the session, we'll glorify your name. I pray this short, trusting and believing in Jesus. Amen. So today we are privileged to be having two esteemed speakers with me here who will be taking us through the new income drawdown regulations. So before we begin, I could like to take a moment to introduce our speakers. So our first speaker is Mr. Martin Oluoch. Mr. Martin Oluoch is the head of pension at Britam Insurance Company, and he will be representing the sponsor of the fund in today's session. Our next speaker is Mr. Kevin Aricha. Mr. Kevin Aricha is the executive director at Kingsland Court, where Kingsland Court are the trustees to the Britam Income Drawdown Fund. Our last person who is with us today here is our sign interpreter, whose name is Viona Mweresa. So on today's, the main purpose why we are having this webinar today is to shed light on the new income drawdown regulations and how they will affect the income drawdown fund. The new income drawdown regulations are an enhancement to the prudential regulations that we have been having in place. So with this new income drawdown regulation, the good news is they are going to offer us a long-term perspective to financial planning to our income drawdown. So before we begin, I could like to maybe welcome you all once again to today's webinar. Feel most welcomed. As we begin, I could like to maybe ask you that to be placing your questions on the chat box as we proceed. Kindly feel free to interact with the chat box. If you have any question, if you have any reaction, if you have any clarification that you may need, feel free to have it typed on the chat box, and we'll be having a team that will be taking us through, that will be responding to the queries on the chat box. But at the end of the session, we'll be having a Q&A session whereby we'll direct the question to the panelists to respond to all our queries that are in the chat box. So as we are going to start this webinar, I could like to request you that we approach this session with the curiosity and the willingness to learn, so that we get to be impacted, and we get to know more about these new regulations and how they are going to affect the income drawdown fund. So without any further ado, let me welcome our first speaker of the day, Mr. Martin Oluoch, to take us through his presentation. Welcome, Martin.
Thank you, Melodious. Good morning, members. May I take this opportunity first to welcome all of you to this webinar. My full names are Martin Oluoch. I am the head of pensions at Britam Life Assurance Company. And I can just start by informing you that the main purpose of this particular meeting is to introduce you to the Retirement Benefits Income Drawdown Regulation 2023. As Britam, our key purpose is to be with you every step of the way. And that includes providing you with protection as from the time when the child is born through our health insurance. As the child grows, we take the child through the education policy. We enable parents to be able to save for the child. As the child grows and finishes school, we also ensure that we provide all the necessary investment products that can support you in taking care of the children, for the child who has now just grown up. We can also provide insurance for the businesses, and we not only protect the businesses, we also protect the employees for those particular businesses. That said, Our key purpose for today's meeting is to focus on pensions. So in pensions, there is the retirement savings part where members are saving into the fund for the purposes of their retirement. So once you attain the retirement age, as most of the members in this particular group, we will now give you the options that are provided by the regulations, which is the retirement income products. That's the annuity or the income drawdown. So today we are here to discuss the income drawdown. So the income drawdown had earlier been introduced into the regulation as an alternative to the annuity. That was in 2004. So following this particular introduction, Britam was one of the first companies that actually initiated this, the income drawdown product. Currently, as the next speaker will also highlight, it's one of the largest funds in the industry that has grown to a fund of almost 9.5 billion. And we do have almost 1,500 members in this particular fund. So before then, there was no clear regulations as to how this fund was supposed to be managed. There were a lot of gray areas on how to manage the individual members. So these regulations basically comes in force to provide clarity. And as the key mandates of the regulator, that's the Retirement Benefits Authority, is to ensure that one is to protect your investments, which means to ensure that your investment, as it's being invested by the different players in the market, are well covered for. Two, it's to ensure that you as a member, you're also protected and you're guaranteed of continuous payments for the time that you will be able to be holding this fund. It is important to note that this fund also has what we call a longevity risk. That means you might outlive the fund. So depending on the investments and what you're drawing down, there is a possibility that as you draw down, at one point you'd actually be able to outlive the fund. So the regulations is just meant to clarify most of the areas that were before not very, very clear on how these regulations apply. I know this might be unsettling because there could have been a way that the regulations were being provided for. There were instances where you are allowed to withdraw up to 15% of your funds on an annual basis, but that is now being changed to 12%. So this particular impact, of course, it will have an impact in each in most of us, but I'm sure the next speaker will be able to explain as from what time will you be actually affected. So as Britam, our key purpose is just to ensure that we are able to educate you as members on what these regulations is about, and that's our key purpose why we are here today. This is the first webinar, and going forward, we'll be also having more engagements just to keep updating you on what these regulations are all about. With that, I will revert it back to the speaker, to the moderator, to take us through the next steps. Thank you.
Thank you so much, Martin, for the insightful overview. Thank you also for putting it out that we'll be having so many engagements. This is the first engagement that we are having, but going forward, we'll be having so many engagements because our main objective is to ensure that the new regulations are out there and are well understood before we put them into the implementation process. Kindly keep the chat box active, keep the questions coming. I know there are some people who have already gone through the income drawdown regulations. Kindly, if you need any place to be clarified, feel free to put that on the chat box, and we are having a dedicated team that will be responding to all the chat box queries. So now on to our main speaker of the day, Mr. Kevin Aricha. Welcome, and take us through the main agenda why we are here today.
All right, thank you very much, moderator, for the introduction. Thank you also, Martin, on behalf of the sponsor, for organizing to have this engagement with the members so that we can try our best to take them through the regulations and the changes that have been introduced by these regulations. Good morning, everyone, from wherever you're joining us from. We sincerely appreciate that you took time to sit in with us today so that we can discuss matters of our income drawdown fund. We can get to engage, give you more information about the regulations and any other matter that you may want to have addressed. And we do hope that we sit in as we progress with the meeting. We appreciate that we have hundreds of members who are joining and some will continue to join. And we also hope that this platform is quite clearly available to you. We also wish to get your feedback about the form of engagement that you're having, how accessible is it to you, and if there are any areas that you can need to make improvements upon. I know following COVID, we found ourselves doing a lot of engagements virtually. It is always our expectation or our desire, especially as Africans, to do this physically so that we can have more interaction. But we hope that in due course, we'll get a chance to have at least 1 or 2 engagements. We can get to meet each one of you, or at least those who will be able to make it, and we'll engage and do our best to work together during this journey. As has been advised by Martin, the head of pensions and the moderator, our call today was for us to help the members understand what are these new introductions into the space through the income drawdown regulations. Internally, we have a policy in terms of how we treat our customers, call it the treating customers fairly, whereby should there be any changes that are being introduced either by the law or internal policies, we do our best to ensure that we communicate this as best as possible to you so that you can work with us and understand why a decision has been made should you come across such a decision. So we appreciate again that this meeting has been organized and you made time to be here with us. For those who are here, or rather for those who joined us in the last AGM that was held, I believe, somewhere in June last year, the representative of RBA came across and advised about a few changes that will be coming through issuance of regulations for income drawdown funds. So today we'll try to unpack that in the simplest manner possible. But before we do so, our agenda is seemingly very simple. First, we get a reminder of what the retirement benefit space in Kenya is like. And then we come into the drawdown regulations as we would want to understand them and what they apply to us. But before we get into that, just to lay your minds at ease, unlike what we expect when we hear of regulatory changes or changes in law, especially in the last few months or years, this time round, we strongly believe that the changes that have been introduced are very, very positive to the benefit of you as a member, so that you can get a better understanding, a better handling in terms of management of the income drawdown fund, a better structure, and now we are fully anchored on a specific law that addresses us and not retirees amongst others. All right. So we strongly believe, and hopefully by the end of this session, it will be quite clear that whatever changes that have been introduced are for the benefit of us as members and not intended to take anything to disadvantage us in any way, shape, form, or manner. First, as we say, we start off with the retirement benefits space in Kenya. Retirement benefits in Kenya must be registered by RBA, the Retirement Benefits Authority. That is the governing body of retirement benefits in Kenya. And it is for them to ensure that everything is run smoothly. Whenever changes like this do happen, they are the ones who get feedback from the members of the public, get feedback from participants in the industry, and ultimately they advise the cabinet secretary in charge of what is the best interest of the members as well. So we must ensure that all retirement schemes are registered with RBA. They also have to be registered with KRA for tax exemption purposes, and we know of the tax benefits that we've enjoyed during our savings life. So for all the times we were a member of a retirement benefit scheme, because all of us without fail were all members of a retirement benefit scheme, there were tax concessions that were made to favor you or to give you an advantage in terms of how you manage and plan your savings. So that is only because the scheme you're in had to be registered as a tax exempt scheme. Schemes in Kenya must also be registered as irrevocable trusts. Those are two points I'd wish to express. irrevocable, and a trust. And in terms of a trust, it means that these funds do not belong to Britam. These funds do not belong to the trustees. The benefits in a retirement benefit scheme belong totally to the members. They do not even belong to the employer whenever you're saving. They belong to the members. But then there is a person in the name of a trustee who manages all these assets, manages the benefits in the interest of you as a member, and ensures that all decisions are made for your benefit. Investing, ensuring contributions are received, ensuring benefits are paid, communication is made available. So that it will be the role of a trustee, and still cuts across even in this space of an income drawdown fund, because we are still a trust, a registered scheme and set up as a trust. So the benefits in the scheme has been expressed, about 9.5 billion, belong to you individually as members. But the legal owner, whoever is in charge, whoever is responsible to ensure that they are managed in the best in your best interest, is whom we call the trustee. And the trustee appoints service providers to ensure that they get to discharge these duties independently. And for instance, the administrator, you're well familiar with the Britam. In case of any inquiries, you always reach out to Britam. In case you need your statement, you reach out to Britam. So they are the administrators of the scheme to help in the day-to-day management of the scheme. Again, all retirement benefit schemes are managed and governed under the Act, that is the Retirement Benefits Act, and respective regulations depending on the type of schemes that you're talking to. There are 4 types of schemes: occupational schemes, individual schemes, and umbrella schemes. The first 3, all of us have been members of in any of the first 3. Either you're a member of an occupational scheme where your employer had set up something for you, and you saved over the years during your working life, and when you retired, you transferred your benefits to this income drawdown fund. You are either contributing on your own behalf, and an individual retirement benefit scheme where you choose to make a contribution on your own behalf, or you're part of an umbrella scheme. An umbrella scheme is a scheme that allows a number of employers, not related in any way, a number of employers can join and make have retirement savings provision for their members through that fund. And then finally, we have an income drawdown fund. So those are the 4 types of retirement benefit schemes that are in existence in Kenya and are required to be managed by RBA and the Retirement Benefits Authority. So today, because the focus is on the income drawdown fund, that is where we'll have our eye on, so that we can get to work together on this. What is an income drawdown fund? As at the time of joining, you had options available to you. If you're in a provident fund, if you remember, when you're retiring, you're allowed to access your funds as a cash lump sum. That was an option available to you. If you're in a pension fund, you had an option of either receiving your funds through an annuity, that is an insurance product, or in this case, an income drawdown fund. Over time, members have come to understand, have come to get more information about how they wish to access their benefits. And that is how we came about to introduce the income drawdown space. So it's just an arrangement where your retirement benefits are paid on a regular income every month, every quarter, every 6 months, or annually, depending on how you choose. They are paid from an investment fund that is made up of your accumulated retirement benefits when you transferred in. The key statement here is regular income and an investment fund. An investment fund in that your funds continue to be invested by Britam, for instance. They continue to earn an income and earn a return every year, and you keep drawing down on the same. So as you draw down, the income is also being your drawdown is also being replenished by an income that is from investments that we get to manage. There is the flexibility of how much you want to access, how often you want to access this. So that is a flexibility that is now in an income drawdown fund that is a feature of an income drawdown fund. And I'd want to believe this is what you got to understand as well when you're making the decision. So income is significantly dependent on the investment performance of the fund. Therefore, we do our best as a scheme to make proper investment decisions so that ultimately we get a return for members that would seemingly match how much they're drawing down. When this discussion, I'd want to hope when you're having this engagement to join an income drawdown fund and not probably an annuity, the thought was you should be drawing down at a rate that is similar to how much the return is being distributed, so that at the end of the 10-year period, and we'll get to talk to that, you still have a fund that you can leave the income drawdown fund with. But again, we'll get to discuss that matter. But always remember, manage your rate of drawdown to meet your ultimate goals. You had ultimate goals whenever you join the fund. So whenever you are looking at your drawdown and your member statement every year, just have a look. How am I drawing down at a rate that is close or similar to the investment return rate? Or am I drawing down way higher? And then what adjustments do I need to make so that at the end of the 10-year period, I still get to meet my goal of still getting a good lump sum to make a decision upon once that is achieved. But again, as you say, today is a day of unpacking a few things, and that will be part of it. Just a quick journey of the income drawdown funds. Prior to the year 2010, we only knew of an annuity as a post-retirement product for members to access. Either you're given a lump sum or an annuity. For those who are in government, in DB schemes, they would get a pension either from government or their respective schemes. But those who did not have such, the only available option was an annuity. So a research was conducted by RBA, and when it ultimately came out that members wished for another option for them to consider. And in 2010, there was a practice note by RBA, practice note number 1. That was actually their first practice note as an institution. And that introduced the income drawdown funds in Kenya. It is a common feature in the Western markets, particularly the UK and the Europe market. So we said, let's try and give that as an option to members here. So prior to 2010, this was not available. And even post 2010, it was not very, very much known because the practice note just allowed that these can be established. But in 2012, then RBA issued guidelines, prudential guidelines, the second guideline that they issued again as an institution. And now this laid out some basic laws of how income drawdowns, once established, they will get then to operate. And this is what we've been operating on since inception until date and to date. Finally, in October 2023, RBA issued the income drawdown regulations of 2023, and now these formally anchor the income drawdown space in the country to have its own laws that are quite specific to it in terms of management, in terms of administration, and any other matter that initially were commingled with all other schemes. So this now is an introductory space where we are now being told, now this is specific to you as an income drawdown fund. Again, we'll assure you nothing much has changed from what we are used to, but any areas that have changed are for the positive, and we'll get to address them as well as we proceed. Our income drawdown fund is now 9 years old, and I do hope that next year we'll have a celebration to mark the 10 years as a scheme. And we started off in March 2015. So we are exactly 1 year and a few days after, because it was on the 9th of March 2015 that you were registered. We currently have under management as of the 31st December 2023, we have about 9.5 billion shillings. For you as members, this is your money, only that we manage it on your behalf. And this makes us the largest income drawdown fund currently in the country. And thanks to all of you that you entrusted us with that decision to manage your retirement savings for you, accounting to 9.5 and much more, because this is in December. We still had a number of members who have joined since. As of December, again, we had over 1,000 members. We had 1,450, I think 56 members who are part of the fund. Again, we thank all of you for making that decision to join the income drawdown fund, and we hope that it is meeting your expectations as you intended when you're setting the goal to join us in the first place. So we thank you, everyone, 1,450 of you, and all those who join, and we assure you of our attention and, of course, our love as a scheme. So previously, what was the income drawdown fund about? And we all know we were part of the income drawdown fund for at least 10 years. So if you're joining in the year 2015, because members joined in April of 2015, then you're part of the fund all the way for the next 10 years. So the first member to leave will be leaving in and about 2025, April 2025 next year. And we'll definitely want to know who that will be. But yes, you are in a scheme for at least 10 years in the income drawdown space. The maximum rate of drawdown was at 15%. The thought here was that you would be drawing down at a rate similar, close to the performance rate generally that was there in the market. The performance that was there in the market was fairly good back then when this was being introduced. And that is how they came up with the 15% per annum withdrawal rate. So we'd compute how much your value is per annum, and then we distribute that depending on your frequency of drawdown. If you're drawing down monthly, we'll divide that by 12, quarterly by 4, and so on and so forth. But in the guidelines, there was uncertainty about particularly issue about transfer of benefits. A few members may have reached out to inquire, can I transfer out of the Britam scheme into any other scheme? Can I access my funds at any point before retirement, before the 10-year period? And now that is being addressed in the regulations. But again, as we said, we were previously managed under the Prudential Guidelines number 002, but that is no more the case. We now have the income drawdown regulations, and these were issued by the Cabinet Secretary for Finance on the 31st of October, 2023. Retirement benefits are under the Ministry of Finance, and that is where regulations are issued from. Now, again, we reiterate that these are specific in terms of management and administration of income drawdowns. Previously, we would commingle information, commingle processes to fit a position, but now after a long time, over 10 years of engagement with the regulator and the members, it is now clear and we are able to come up with regulations that are quite specific to us. So as part of the regulations, and we're coming now into the meat of our discussion, we're going to talk to a few key areas. Number one, membership in the scheme. How do you qualify to join the scheme? What kind of funds do we allow into the fund? We get to talk about access to your income drawdown. As has been alluded, there has been a change in terms of how much you can draw down every year, and that we'll get to talk to. Please, we ask for patience on that. Transfer of your benefits. Are you allowed to transfer your benefits? And what are the terms? If you're allowed to, what are the terms for you to transfer? What are your options upon completion of the minimum membership period? What options are available to you once you finalize? Maybe the members will be leaving from the year 2025. What are the options available to them? In the unfortunate chance of the death of any member, what options are available to the beneficiaries who are nominated and who are determined? And finally, a clear complaint and dispute resolution process is now required of us, so that we tell members, should you have any inquiries, should you have any complaints or disputes based on your interactions with the scheme or decisions made by the scheme, please, these are the channels we follow. Previously, members did not have a lot of information on this, and they would always end up at the Retirement Benefits Authority, and unfortunately, they will be referred back to the scheme for the scheme to address the same matter. So we are saying, how can we then make it easy for you to address any inquiry, any concerns, any complaints that you may have, and that we'll get to address shortly. So as we'll be going through those 6 key items, it will be clear to you that not much has changed, and any that has changed, again, we believe it is for your benefit ultimately. So contributions into the scheme can only be received under 5 sources. Number one, from a registered retirement benefit scheme, like we used to, or like we were members of, and your funds came from. Previously, it was not very firm and clear on this. Should you be a member of another income drawdown fund, you are allowed now to transfer your funds from one income drawdown fund to another. So if you're a member of that income drawdown fund and you choose to transfer to Britam, then we are allowed to receive that. The NSSF funds, we have now moved into a dispensation of the new NSSF, where it is now a pension scheme. You are allowed to transfer those funds into our income drawdown fund. But that being said, even your NSSF prior to the introduction of the new NSSF last year, you're still allowed to say that rather than pay me that cash, please transfer that to Britam. I'll consolidate everything and I'll draw down as part of my benefits from that. For those who were part of the public service, there was the public service superannuation scheme that was introduced a few years back. So if you were part of that, again, your benefits can be transferred and consolidated as part of your funds in our income drawdown fund, and then you draw down from that. And any other scheme that has been established legally under the Act of Parliament. So that is a recognized source of funds, and we are allowed to transfer that into the scheme. What we are simply saying is that these funds should come from retirement benefit-based sources. So if you get a windfall, you sell off a property, you sell off an asset, you cannot then transfer that directly into our scheme. There are other various options in terms of how you can plan for those funds. And of course, Britam, as Martina said, they have options for you from end to end. You can reach out to them, but these cannot be transferred into our income drawdown fund. So again, any money that is not part of the retirement benefit space cannot, for the moment, be transferred into our income drawdown fund. The membership period in an income drawdown fund still remains at 10 years. So if you join an income drawdown fund space, you're there for at least 10 years. But now what has been introduced is that you are allowed that after at least 5 years of membership, you can make the decision to transfer your benefits from one income drawdown fund to another. After 5 years of membership, you are allowed to transfer from one income drawdown fund to another, which brings us to the next point of discussion. Again, as we said previously, it was not clear whether you can transfer or not. And most schemes then made it a requirement that once you're in their scheme, you're there for the next 10 years. But now the regulations, after taking on feedback from members, feedback from the industry, resolved and agreed that yes, let us allow transfer of benefits. For now, you're saying that if you're a member of the scheme for at least 5 years, then after those 5 years, you can choose to make a decision to transfer to any other income drawdown fund. The key part here is you're transferring to another drawdown fund, not transferring as a cash payment to you or to an annuity product, for instance, or to any other investment product. No, you're transferring to another registered income drawdown fund. And if you choose to do so, you cannot do it in part. You cannot transfer from scheme X, IDD X to Britam, 50% of your value and say, let's send 50% to Britam and the other 50% remains with the other fund. You have to do it as a whole. So the full value is moved across to your new IDD. However, this takes effect from the 1st of November 2023 onwards. As you would know, no law should be designed so that it takes effect in retrospect. So from 1st of November going forward, that is when we're now counting your 5 years of membership. So we're saying if you joined last year, then last year does not count. We are saying from 1st of November now we start year 1, year 2, year 3, and going on like that. So any transfer of benefits can only happen from the year 2028 going forward. But that is an option that has now been introduced that had previously not been available. The next space, which we've continuously referred to. First, it is now clearly defined that your drawdown rate, the rate that you draw down upon, 15%, for instance, shall be based on your accumulated balances on an annual basis. So every year we'll define what is your balance after we've distributed income. Now that balance is what we'll base and say that now your 15% should be at this value. Ultimately, you'll get to access your full balance as a member. If you brought in £1 million shillings, by the end of your term as a member, you shall have accessed the full £1 million shillings. But you're saying in terms of retirement planning, how can we then manage so that once we get to the retirement age, I mean the 10-year period once done, we still have some money left for us to keep us going during our post-IDD life. So that is how we'd want to view it in this case. So we are saying that every year, on the 1st of May, once we conclude on the audit, as a matter of fact, we are at the tail end of finalizing on the audit for the year 2023. Once we conclude on that, we share the investment income. Then we define what your balance is for the end of the year 2023. We'll write to you formally advising you that this is your balance And based on the law, this is how much you should access. We'll also advise you, based on best practice, the best option for you is this, and will allow you to make that decision. The second part is that the maximum drawdown rate has now been reduced from 15% down to 12%. It has been reduced from 15% down to 12%. Again, we're trying to say this. The intention was, the 15% back then was you're drawing down at a rate very close to or similar to the investment income, or rather the investment space, the investment return space generally. Over time, that space has continuously shrunk. We've faced enough challenges in terms of investment performance, and that is how RBA defined. What if we now reduce that from 15 to 12%, so that again, we still allow members, by the end of the 10-year period, they still have an amount that they will still leave the IDD fund with. However, we want to make it clear. Please, initially when we say we're reducing it from 15 to 12, we are now clarifying. Legally, that rate will only apply to new members who are coming in. So any member who will be joining the fund from the month of May 2024 onwards, their maximum required rate shall be 12%. But those members, old members, again, forgive my pun, for the members who are there prior to May 2024, so you, all of us who are here are already members of the fund, you shall still retain your maximum limit of 15%. That shall still be an option available to you, that I can go to the limit of 15%. But again, we are saying it is up to you to make that decision. Every year on the 1st of May, we will be sharing with you communication, telling you that this is the rate you're drawing down upon legally. This is the rate we advise you to consider, so that ultimately, again, by the end of your 10 years, you still have some money remaining. But where you are the one to choose, I still want to go for a certain rate. And for members who are already members of the scheme as of now, they still enjoy the 15% rate of drawdown. So please let us have that distinction and let us make it quite clear. But then we come to the next point. You are allowed every year to make your changes, every year. That on the 1st of May, once we issue the communication to you about your value, your income distribution, and your member balance, then you make a decision on your rate of drawdown, should you wish. You say, I want to retain 15%, or I want to reduce to any other rate that you have advised or have come across to understand. But when it comes to the limits, if you are above the statutory limit, the legal limit that is advised, we are now required to automatically adjust the rate of drawdown to align with what RBA require in terms of the law. So if we define that you are above the 15% rate, you're drawing down at, let's say, 17%, then you are required by law to make an adjustment down to 15%. But before doing so, we have to inform you. We will have to inform you in good time that from a certain date in future, this is going to change from what you know at a certain rate down to a 15%, which is required by law, right? So that for now may seem to some that as a drawback. But again, we kindly ask that you look at the bigger picture. In 10 years, in 8 years, once you conclude maybe the 10 years that you've been a member of the scheme, you still require some money to remain behind for you. We are saying by the end of your membership in the scheme, all your funds will still be yours, even when these are reduced from 15 to 10 to 12 to whichever rate, they're still your funds. But you're saying, please try and manage your cash flow so that by the end of your 10-year membership period, you still have a substantive amount that can allow you to make another financial decision going forward. So this shall also be looked at purely also as a financial planning tool for us. But again, as we said, all adjustments shall be made following a communication. To some will actually reach out to you physically and ask that we have an engagement, especially if it is a very keen discrepancy, but we'll always communicate to you and allow you to share your comments and sentiments as well. Once you attain the 10-year period of membership in an income drawdown fund, like for those members who will now be leaving the fund from next year, You have three options available to you. One, you can continue with the income drawdown arrangement. You can say, yes, it served me well for the 10 years. I'd really want for it to continue serving me well as we progress. You'll reach out to our team members and they will advise you on how to go about this. Or you still have an option to say, now let me try the annuity space. We said a post-retirement product is also, an annuity is also a post-retirement product. You can say, of my money, please let me try the annuity space now going forward so that I can see the benefit of that as well. But you also have the right to access the remaining funds as a lump sum. You have the right to access whatever residue you have after the 10-year period as a lump sum. But we always give a caution. Please seek professional advice from our team, from us as trustee, so that we can help you make the right decision. Please reach out to us to help you make the right decision of how you want to utilize and apply your benefits. So that once now you've attained that termination age from our fund, you still make the right decision for your benefits. We'll do this and we'll do this at no additional cost to you, but ensure that you get the best advice possible. In the unfortunate event of death, there is a way that we need to determine how your benefits are distributed. But before we even go into that, we'd ask members, please ensure that at all times you nominate and update your beneficiaries. Please ensure that you nominate and update your beneficiaries. We actually even advise you do this on an annual basis. We are coming up with an automated system that hopefully by the time we get to May, that will be a proposition. But if not, it's still something that is work in progress to allow you to make such nominations very, very conveniently, very easily. But please ensure that you make your nominations and update them. Most of us joined the scheme, all of us joined for today, of course, but most joined away a long time ago, 3, 5, 9 years ago, even when the scheme was being established. And you indeed rightfully filled your nomination form because that was a requirement. But things have since changed. 9 years, 8 years, even 3 years, 2 years, it's a long, long time, so that your nominees may have changed. Maybe you wish to add another nominee. You wish to remove one because they're now independent and they're living a life large. So please ensure that that can only be reflected once you give that communication to us, on an annual basis at least. If nothing changes, still indicate that this is my nomination in 2024. It can be similar to what was there last year, but at least you get the trustees best in the event that they have to use that. But then, should the trustees be called upon in the event of a member's death to make a decision of how benefits are to be accessed, there are 3 options again available to the members. The income drawdown as you are drawing down, and this is a very, very common position. We've seen this a lot with our members, that they indicated even the for the remaining period or for the remaining funds that will still be in the scheme. So that is allowed and very, very much encouraged. Members are also allowed to purchase an annuity. For those beneficiaries who will be qualified, you can purchase an annuity with your proportion of distribution. So that is an allowed position as well. But finally, again, they have the right to access these funds at a lump sum. They have the right to access these funds as a lump sum. So it will be upon the beneficiaries to make a decision once they are determined, but it is also up to you, maybe. Your nominees, please advise them of the right decision to make. You know, sometimes when you earn, you get a lump sum injection of funds. As Kenyans and also as human beings, of course, we love receiving our funds in cash. But then the cash is in shock. If you get a lump sum of 8 million shillings because of your loved one nominated you as a beneficiary and they're no longer there, and you did not expect of this, chances are you may not utilize it in the best interest of you as a beneficiary. So why don't you then choose to continue with the income drawdown fund, continue earning an income from those funds until such a time when either they're depleted or you complete the 10-year period that your initial loved one had in mind. So those are the conversations that we also wish that you have with your loved ones, your beneficiaries, and it will help them a lot in terms of their management and the legacy of your benefits once you're no longer with us. But again, we reiterate, please update your nomination of beneficiaries at least annually. That should be the initial basis of what you get to do. Let us throw that thought away from our minds that if I nominate now I'm calling death. No, it should not be. It is about structuring how your legacy in terms of your retirement and your working life shall be distributed for the benefit of your members. Otherwise, you leave the scheme and the trustees in a very awkward position to make a determination, and this sometimes takes a long time, to the disadvantage again of your beneficiaries. So please ensure you do nominate your beneficiaries. Nomination of beneficiaries can be done at any point in time. You do not have to wait for 1st of May, for instance. You can do it anytime that you feel you need to make that change, but ensure that it is properly executed, witnessed, and shared with us. Fund expenses is another area we wish to talk to. We said the regulations are not, they are a positive regulation in our opinion. And one of the things that was positive was they have now taken away the burden of the RBA levy. Previously, income drawdown funds, as with any other scheme, were required to pay the RBA levy. But now, with effect from the year 2023 going forward, we are not required to pay any levy. If anyone was keen in our financial accounts, you would see that we would pay RBA 5 million shillings every year in terms of levy. So that is no longer payable to them, and it is not going anywhere else except back to your benefits and back to your pockets. So more money for us. So again, as it were, Britam as the sponsor continues to bear administrative expenses on behalf of members. This is not common to all income drawdown funds. This is unique now to Britam, that yes, we are going to cater for administrative expenses. Nothing is going to be passed on to the members. So we are saying, in terms of administrative expenses and levy, you are not going to pay any of that. So more investment income back to us as members. But as it were, I'm not sure that we should have started with the bad news first and then the tough news first and then the good news second. But it is what we have. We all know about tax. Tax is here with us. There is no other option of going away from it. But we are always told that if you're a member of a retirement benefit scheme that is registered as a tax-exempt entity, there are benefits that you still enjoy. You're not going to be taxed like anyone else because everyone is required to pay tax. You're not going to be taxed like anyone else. There are concessions that the law allows for you to enjoy because you're part of an approved structure. Withholding tax is payable on all our drawdowns from what we call the registered balance. Once you receive your member statement, you'll always see it has two portions: registered balance and unregistered balance. This is how you accumulated your benefits back when you are a member of your occupational scheme before retirement. So any amount that was tax allowable was called registered. Any amount that was above the tax allowable limit of 240,000 shillings per year was unregistered, as we refer to that. So the registered balance is, there is withholding tax that is withheld, and that withholding tax is a final tax. There is no additional tax you'll be required to pay on your part. It is paid one-off, and there is no additional administrative expectation even on your part to declare it. So we pay it on your behalf. It should reflect in your iTax ledger. I know we had challenges previously with the iTax system. It was totally not the fault of the scheme. It was just an issue with the iTax platform. I know they've done a lot to improve upon it, and we hope when you're coming to file your returns in June this year, please ensure you file your returns again. This will be reflected, and there is nothing more that is required upon you to do. So it's a final tax, and it is no additional tax is payable on your behalf or from you, required from you by KRA. But before we determine what is the taxable amount, we allow you 25,000 shillings every month as an allowable tax-free amount. So if your drawdown from registered balance is 30,000 shillings, we are saying before we tax that 30,000, we first allow 25,000 as a tax-free amount, and we now only tax 5,000 shillings as opposed to the full 30,000 shillings. So there's that concession still that is applied to us. that for every month, 25,000 shillings of what we pay you is still not taxable. All right. So there is that benefit that is still cutting across even with the new disposition in terms of regulation. Now, once we determine the 5,000 that is taxable, or whichever amount, depending on how much you draw down, we are saying that then we apply that on what we refer to as a graduated scale. That for the first 33,000, 10%, second 33,000, 15%, third, fourth, and above 133,332, that is taxable at the rate of 30,000 shillings. So the other thing that we also advise members is that please, one of the other tax planning options we give you is that your drawdown amounts, you can adjust them so that you're only enjoying a very good portion of the tax-free amount, and very minimal tax is payable for you until such a point. And my next statement carries that drawdowns paid after the age of 65 years are tax-free. So any amount that we pay you after the age of 65 is going to be tax-free. Any drawdowns we pay you monthly, we're not going to refer to any registered or unregistered. It is totally going to be tax-free. So if we plan ourselves right from the age of 60, 61, 62, 63, we can still minimize on the tax amount we are paying until we now start enjoying that tax-free space at age of 65 and above. All right. So that is a financial planning tool that we ask that you also take advantage on. For investment income that is earned from the unregistered balance, that investment income is taxed at the rate of 30%. So we are saying, again, the members would have registered and unregistered. Not all members have the unregistered balance, but everyone must have a registered balance because of how you accumulated your benefits. There are some members with the unregistered balance, and this was the balance that was above the 240,000 limit during their saving life. So investment income from that is taxed at the rate of 30%. So if, let's say, Britam declares a rate of return, for argument's sake, we say they declare 10%. Then of that, 30% of it is then defined as tax, directly payable to KRA on an annual basis. And unfortunately, I know it isn't something we'd love to do, especially now that we paid tax over and over in our working life. But it is what is provided for now. We continue to lobby the authority, the KRA, Treasury, to remove this option as well. But it is a work in progress, and we hope, against all odds, we'll be able to achieve that position. Finally, of our talking points, we say that we welcome, in terms of treating customers fairly, we welcome your comments, we welcome your complaints, because that is how your criticism, that is how we get to do better beyond what we are doing. We're not going to shut any member from raising any matter, including compliments. We welcome compliments, but to ensure that you have a very seamless process in terms of how you share your concerns, share your inquiries. We are required now within our policies to have a clear dispute resolution mechanism. And over, we'll continue reminding you that these are the options available to you. Should you have any inquiries, our purpose as a scheme, our policy as a scheme, expectation is that we resolve any inquiries, address them, complaints and disputes amicably first, and in a very timely manner, and to the satisfaction of the member. We always do our best. If there is any member who has had a chance to raise any inquiry or complaint, we do our best to address this as quickly as possible in the best interest, and also as amicably as possible, so that you can continue enjoying your retirement life. Your retirement life is not one to pick on any fights. It's one to sit back, enjoy with your loved ones, and enjoy your life then. If that is not the case, if anyone has raised a complaint and it has not been addressed in a timely manner, in an amicable manner, or to your satisfaction, then we are saying we have options available to you. First, of course, raise that with the administrator or sometimes the customer service team. But principally, we'd ask that you raise that with the administrator, because they are the contact people with you. They have your information most. They would know the regulations. They would know how to address these matters. So shortly, we are going to share with you the contact details. Please ensure you first raise this in writing with your administration team. If this is not resolved within 14 days, we are saying we have to resolve any matter within 14 days, respond within 14 days. It is not our intention to wait until the 14th day to respond, but immediate response is a requirement. But within 14 days, we should all be smiling and happy and going back to our business. If not, then address that matter to the trustee. Address the matter to the trustee. If anyone has a complaint that has not been addressed, even as of now, please address that to the trustee, and we'll ensure that we pick it up. Because again, as you remember, we said our responsibility as trustee is to ensure that the trusts and the scheme works in your best interest and no one else's. So it is in your best interest that a decision shall be made, and we'll ensure that it is made for you and you'll get to understand why any decision is made. But again, we are all human. Should we not be able to satisfactorily address your concerns as well, you have the right to address this matter with the Retirement Benefits Authority. You have the right to address the same matter with the Retirement Benefits Authority. Of course, again, it has to be in writing, and we'll give you the contact details. But just again to reiterate, it is our intention and our aim to ensure that all inquiries that are raised, they are addressed in good time, they are addressed amicably, and to your satisfaction as a member, so that you can continue to enjoy the services of the drawdown fund as it is. So please, I'm sure this presentation will be shared following this engagement, but you can even take a screenshot, write these numbers down. The administration team's details and the numbers, the email address is before us, customerservice@britam.com, and the phone number is also addressed. And should you even want to visit them, tunajua mahali wako. They are at the Britam Tower in Upper Hill. I'm sure some of us have already visited their offices, very nice offices at that. So you are also allowed to come. You're not saying just because I called, just because I wrote, I shouldn't. If you feel you need to, please feel free to come. Again, if these are not addressed by Britam, we say, come to the trustee. These are our contact details. That is our email address, is addressed to us. That is our phone number. And we're also located in Upper Hill, Flamingo Towers on the first floor. Again, welcome, and feel free to visit us in case of any matter, or even if you want to just pass by and say hi, karibu sana. But again, if you wish to address any matter to the Retirement Benefits Authority, that is their website. Please, again, it is an open website, and it allows you to make any complaint very simply, and you can address your complaint through that website, or you can call them and they can guide you on how to go through that process. But again, they can visit them. They are at Raimtula Tower on Upper Hill, and you can see there's a commonality. We are all in Upper Hill Road. So we actually are located along the same line. It's just a coincidence. We all operate an open door policy. You do not need an appointment to come to visit us. And we're saying you should not just visit us for complaints, which you're allowed to. If you need any inquiry, if you need any guidance, again, you are allowed to visit us, and we'll give you the best assistance possible and the best attention possible. We have now concluded on the business of which we call this meeting. But before we go to the Q&A session, just quick reminders of what we just talked to, or what we'd wish for you to remember as we leave today. That the maximum allowable drawdown rate has now been introduced at 12%, but this will apply to new members who will be joining the fund. For members who have been there, the old members, if you'll allow the pun, the old members shall continue to have the maximum limit of 15%, but you are at will and very much advised that please always review. You do not have to continue retaining it at 15%. Yes, we understand the economic challenges, but we wish that you sit with us and we'll give you advice on the options that are available to you so that you can make the most informed decision. But again, you're still allowed to continue accessing at 15% of your balances every year. You can transfer your benefits from one income drawdown to another after completion of 5 years, and this starts from November 2023 onwards. You can amend the terms of your drawdown. You can choose to amend the rate of your drawdown, amend the frequency of your drawdown on an annual basis. For administration purposes and for legal reasons, you do this annually so that you can always retain the limit, the maximum limit of drawdowns. If your drawdowns go beyond the limit allowable by law, we are required by law again to adjust that down to the allowable limit. But we'll do that after informing you in good time to allow you to prepare of any such change and understand why this change has been advised. We'll not do it in a vacuum just because it is the law. We'll engage you, tell you that this is coming. When is it coming? Please start making adjustment in terms of how you manage your cash flow. You can amend your records at any time. Your membership records can be amended at any time, but in writing and in good time, especially when you're talking about bank account details. You can choose to amend your bank account details, especially that is very common, but you have to do it in writing. Give us ample time to make the adjustment so that you can now start enjoying the new changes as you wish. And finally, the fund has a clear complaint and dispute resolution structure. For those who have had a chance to engage the fund on any complaint, we hope and believe that this has been addressed. Nothing has come to our attention as trustee, nor the authority, but even if they get there, we do our best to address them very fast, amicably again, and in your best interest so that you can continue enjoying your membership in the scheme. And with that, thank you very much. We leave you with the contact details for the administration team, the trustee, just for your knowledge. And we'll now hand it back to the moderator, Ms. Bosibori, to take us through the next session. Thank you very much, members, for listening to us. Asante sana. Thank you.
Thank you so much, Kevin Aricha, for taking us through the income drawdown regulations. Thank you for breaking them down in a way that is well understood to us. And also thank you for reminding us that come next year, we are going to have a celebration since we'll be coming to the end of the first 10 years period. And thank you for also reminding our clients that it's good to update the beneficiaries on an annual basis. Kindly note that we have BRITAM offices across the country. So if you wish to update the beneficiaries, kindly walk in to any BRITAM office. I know we have given addresses to the main office in Nairobi, but if you are in any country and in any county, kindly walk into any BRITAM office and you will be assisted to ensure that you update your beneficiaries on time. And an emphasis on the new regulations, kindly note that they will only be affecting members that joined from 1st November 2023. For the old clients, as per whatever we have heard from our presenter, there will be no changes to whatever you are drawing down. The amount will not reduce from the 15% to 12%, but on a willingly basis, you are allowed to walk into our offices. We can sit down, we can have a conversation, and then we can guide you on the way forward. I know this is the first engagement we are having today, but we are going to have so many engagements from today. We are even going to extend our engagements to a one-on-one engagement. We'll try to reach you out on a one-on-one engagement. We sit down and try to look at how maybe these new regulations are going to affect members, especially for members that joined from 1st November until date. So now we can now proceed to a Q&A session. And thank you so much for the so many questions on our chat box. That means that we have been listening. I've gone through the questions and most of them have been answered by the presenter, but I'll be picking a few and I'll direct them to Kevin Aricha, who is going to respond to them. So I'll pick the first question, and the first question, I can maybe respond to the first question. The first question is from Ruth Mugo, who asks, how can one change the frequency of the withdrawal, e.g. from monthly to quarterly? When we are talking about change of frequency, a member is allowed to change the frequency on an annual basis. So you can only change your frequency once in a year. And we normally determine when you are supposed to change the frequency. We start counting that month from the month you joined. If, for instance, you joined BRITAM in March 2023, so you can only be allowed to do changes to your policy when we get to March of every year. So The changes are normally allowed. You can walk into a Britam office, you can do as an email once you get to the anniversary month, whereby we have said the anniversary month is the exact month when you joined. And these changes can only be done once in a year. And then the other next question, maybe this one I can direct it to Kevin Aricha. There's someone who has asked, if I transfer after 5 years, could I still be allowed to withdraw my funds after 5 years from the new service provider? Are there any charges while transferring the funds?
Maybe if I can get the name.
Okay,
that's okay. That's okay. Whoever you are, thank you very much. We'll call you John for now. All right. Number one, there is no penalty whenever you'll be transferring your funds. There is no penalty charge that will be applied. There is no tax that will be imposed. The value of your benefits will be transferred from one income drawdown fund to the other. All right. There will be a process, and if ever you get to that point and you wish to seek and know how to go about it, there will be a process whereby you will be required to give a notice period of at least 3 months so that assets can be liquidated to allow for such a transfer. And then once you do that, then you issue a notice and that fund will be transferred. When you move into the new fund, we shall carry those 5 years you are a member of the other fund into the Britam fund. So you'll only be expected to conclude the other 5 years onwards. So you're not going to start from zero again. You're going to continue from the years you are in the other fund shall continue and they shall carry across. So if you are a member of this other scheme for 6 years, you are allowed to be here for the next 10 years, and then the options shall be available to you as if you've now concluded the 10-year period. Thank you.
And do we have any charges when transferring?
No, there are no charges. Again, just to confirm, there are no charges. There is no tax expectation. So whatever your value is, if it is 10 million shillings, that is what will be transferred across to the new scheme. Thank you.
Thank you, Aricha, for clarifying that. We have the next question from Nasi Koskei, and he's asking, I could like to change from IDD to annuity. How can I do it given the option now?
Koskei, thank you again for that comment. Now, unfortunately, for now, you may not be able to enjoy that benefit. That benefit can only come once you conclude a 10-year membership period in an income drawdown fund. So for now, for the next 10 years, you will still be a member of an income drawdown fund. After the 10-year period and your residue amount, then you can make that decision to transition to either continue the IDD or move on to the annuity space. So for now, it is not allowable by law.
Okay, maybe the next question, this one I'll direct it to Martin Ogoch. Ruth Mugo is asking, address how one can alter amount and frequency to stretch beyond 10 years.
Thank you, Ruth. So there is always an option actually to reduce your amount that you've been the payouts that we make to you on either monthly basis, a quarterly basis, or an annual basis. So with that, we are working actually even on an elaborate way in which you can be able to give you projections on an annual basis to ensure that you can see how long, or you can get a projection of, based on what you are currently accessing, how long is your fund likely to last? Based on the new regulations, this will be done on an annual basis. So that means at around May, and I think the presenter also highlighted on the same, at around May, we will be sending you a projection of how your fund is doing. That is one, based on the statement. And then for how long, based on the payouts that we make on a monthly basis, how long do you expect your funds to last? So I think that highlights that. So based on that projection, you will be able to adjust whether you need to adjust downwards for the fund to last longer, or whether you're okay with it the way the deductions are. But you have just to take note that the limit is at 12% for any member who is joining after after November. But for the members who are existing, it will be limited to 15%, as the presenter has already highlighted. Thank you.
Thank you, Martin, for that. I've seen so many queries on we are looking at we are mentioning the maximum amount a member can access. Do we also have a minimum amount a member can access?
No, we're not. Members, you are allowed. Again, in terms of your investment financial planning, yes, you are allowed not to access a single cent. You can say, for the next 1 year, I do not wish to access any amounts. I already have other sources of income and they will sustain me for that period. The funds will remain as your funds. They'll continue to earn an income even more. So there is no minimum requirement to have a drawdown expectation. So you can literally not draw down any amount and still be a member of the fund. Thank you.
Thank you so much for your questions. Thank you so much for your reactions. I've seen so many people who are saying good job. Thank you for the job well done. So I take that thank you to the presenter and Martin Olwach, because everybody is just saying the presentation has been amazing, and everybody is saying your customer care team is great and responsive. We appreciate for the compliment. Thank you for the informative session. Keep it up. I've seen all the reactions. I've gone through all the reactions. Thank you. I've seen all the questions that have been placed on the chat box, have been responded by our team. I also want to thank our team that is on the back end for ensuring that all the questions have been responded to. But kindly, if there is any question that has not been addressed, kindly feel free. We'll ensure that all the questions have been addressed. We'll do that maybe via email. And if you will wish to get any clarification, we are available in any of our offices. Feel free. We normally have free tea in our offices. Feel free. Come, let's take tea. Let's have a conversation. Let's look at the plan. Because ideally what the new regulation is trying to drive us to is try to ensure that we are having a good retirement plan. Of course, I mean, the income drawdown, when it started, it was looking at the 10-year period. But now with the new regulation, it's trying to give us a long-term plan on how we are going to survive on our retirement, because we want us to be comfortable. We want us to be in a place whereby we have a monthly drawdown. We are not supposed to look at it we're not supposed to look at it from the 10-year period angle, but we're supposed to look at it as a long-term thing. So we are happy for bringing the information to you, and we are happy that you are all informed. We are going to be having so many engagements, as we had said earlier. We'll engage you, we'll have conversations, and if you also need us to have conversations with you, welcome to our offices. And after this session, by tomorrow, we'll be having these presentations going out. We'll have the recording also, the recording and the presentations and everything. And we'll also have a Q&A that will be shared with you via your emails. And those people that have been asking about the statements, our statements will be shared once we declare the final interest rate for 2023. Once that is declared, we'll have all the statement shared on time. Without any further ado, I think I can now close the meeting, because we have exhausted everything. And thank you so much. I could like to appreciate Mr. Martin Olwach and Mr. Kevin Aricha for taking us through the session. Thank you so much. And for our audience, thank you so much for joining on time. You are here on time. We appreciate that. Thank you for that. Thank you also for creating time to come for us to be able to have this successful webinar. We appreciate you all. And as Britam, we say thank you, and we look forward to having more engagements with you. See you next time. But before we finish, I could like us maybe to take, may the grace of our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit be with us now and forevermore. Thank you so much, and see you in our future engagements. Bye.